welcome to your Mortgage Insider Update. It is September the 9th, 2025. We are following up on the Bureau of Labor Statistics reports this last week. Actually, today on Tuesday, the quarterly update for basically shoring up jobs from the prior quarters reflected the first quarter through the first quarter 2025. A further adjustment of almost 900,000 jobs were overstated in the original reports that date back to the first quarter of this year. So far, not a major change in interest rates after the Friday jobs report. So we'll talk more about that. That's the more active report. The Bureau of Labor Statistics jobs report comes out each first of Friday of each month, and that came out with far fewer jobs created in the economy in August than expected, just about 22,000 jobs. Revisions from prior months in July and back to June reflected in June a loss of 14,000 jobs in the economy. So to put it in perspective, in July we got the June report, and that reflected 140 some odd thousand jobs created. And so they've revised that overstated 140,000 to down to minus 14,000. So that's where we're seeing a huge drop in interest rates that started about Thursday last week through Monday. Things have kind of settled. We're going to take a look at that right now. Much lower interest rates that we need to hang on to through the Fed meeting. Before the Fed meets next week, we're going to have a lot of economic statistics when inflation reports come out for consumer price index and the producer price index. So those reports come out prior to the Fed's actual decision making. It is currently expected that there will be a 0.25% cut at the very least in their meeting next week. Starts on Tuesday, ends on Wednesday with a lovely press conference with Fed Chairman Powell. So as we lead up to that, let's take a look at the charts on where interest rates lie this week. And as we kick off Tuesday, the 10-year Treasury up slightly after hitting its low point just above 4% here. We're up 4 basis points today. Let's take a look. We can see that the rates dropped to just in this 4.04% before hitting its bottom yesterday, closing, taking a little bit of relief. The QCEW report did come out today, like I mentioned earlier. It is, as expected, there's revisions, pretty significant revisions, but it does look like that is not going to be newsworthy enough to make any major impact in moving us any lower on the 10-year interest rate in particular. The 10-year interest rate does not replicate mortgage rates, but it does replicate the direction in the terms of the actual interest rates are definitely falling. We can see that this last week, September 2nd into the 3rd and the 4th. So we had employment reports coming out as of Thursday last week, and then into Friday we had the big fall off. So really relief. We've seen similar relief back in the first couple days of August. We had this jobs report back for July, came out early August. We had a similar result. What happened was it settled and then moved a little bit higher throughout the month. So these don't move in a straight line. It's great to have a reduction in interest rates. That'll make some great headlines. If you're interested in buying a house, this is a good opportunity. It is possible that we see interest rates float back up a little bit coming into the next 7 days as we prepare for the Fed meeting. Just to bounce this back in time a little bit, let's take a look at the last 12 months. We can see we are not at the lowest point. We had hit back early this year in April, a low point of just at 4%, so we haven't tested that level yet. We were unsuccessful, and actually a big V was created in that early April month where we had what looked to be a positive turn to interest rates and only to be moved higher with some negative news around inflation. So we've got to watch for that as the consumer price index comes out. We could be in a similar pattern where we do see these V's over time. But just relative terms here, October 2024 was the last point in time where we kind of broke above this 4% retracement level, and we stayed above that ever since. So as we start to get into the Fed cuts or Fed loosening cycle, it appears that we're going to be on that trend. If unemployment rates start to tick up, they did go up to 4.3% this last month. Record 4.3% is still a pretty good low in comparison to where it was, to say, during the pandemic in the double digits. But moving higher is not what the Federal Reserve wants to see. So they're going to start to loosen their federal funds rates and start to give a little bit of relief that as we are already seeing, the 10-year has come down in anticipation of that. We hope to see down the road maybe lows back to like last year in September, right before the last Fed meeting. Now, just as a reminder, a year ago the Fed came into their September meeting and cut 50 basis points, which was a little of a surprise to the market. It's still in the conversation this year, but what happened was they did that 50 basis point cut, and then as time moved on, we actually saw rates go up as the Federal Reserve did cut their interest rate multiple times at the end of 2024. So we hope not to see that same pattern this year, but right now we're going to take the lower rates where we can get them and enjoy our start to this week. As always, we'll keep an eye on the news for you and come back each week with an update. We'll prepare for the Federal Reserve meeting next week. Follow us here on YouTube. Subscribe to this page if you want to see the weekly updates. If you receive our newsletter, hopefully you find it valuable. Feel free to subscribe here on YouTube or give us an email back. Give us any feedback. We really appreciate it. Have a great week.